You may withdraw yourself from the queue by pressing star 2. I'll be standing by if you should need any assistance. It is now my pleasure to turn the program over to John Merriweather, Vice President, Capital Markets.
Thank you, Leo. Good afternoon. I'd like to welcome everyone to AMC's second quarter 2025 earnings webcast. With me this afternoon is Adam Aron, our Chairman and CEO, and Sean Goodman, our Chief Financial Officer. Before I turn the webcast over to Adam, I'd like to remind everyone that some of the comments made by management during this webcast may contain forward-looking statements that are based on management's current expectations. Numerous risks, uncertainties, and other factors may cause actual results to differ materially from those that might be expressed today. Many of those risks and uncertainties are discussed in our most recent public filings, including our most recently filed 10-K and 10-Q. Several of the factors that will determine the company's future results are beyond the ability of the company to control or predict. In light of the uncertainties inherent in any forward-looking statements, listeners are cautioned against relying on these statements. The company undertakes no obligation to revise or update any forward-looking statements, whether as a result of new information or future events. On this webcast, we may reference non-GAAP financial measures, such as adjusted EBITDA, free cash flow, and constant currency, among others. For a full reconciliation of our non-GAAP measures to GAAP results, please see our earnings release posted in the Investor Relations section of our website earlier this morning. After our prepared remarks, there will be a question and answer session. This afternoon's webcast is being recorded, and a replay will be available in the Investor Relations section of our website at amctheaters.com later today. With that, I'll turn the call over to Adam.
Thank you, John. Good afternoon, everyone, and thank you for joining us today. It is earnings day at AMC, and what a day it is. In this second quarter of 2025, AMC showcased the impressive operating leverage that is inherent in our business. Importantly, in Q2, movies from just about every single major and minor studio alike crushed it at the box office in spectacular fashion. With the second quarter domestic industry box office surpassing that of the first quarter of 2025 by a stunning 85%. At AMC, we are particularly pleased that on many of these second quarter movies, our market share way overperformed. That came in part because of our network of especially productive theaters, AMC and Odeon having more premium large format screens than any other exhibitor on the planet, and the effectiveness of our compelling marketing programs. In this year's second quarter, AMC and Odeon rolled out the red carpet for nearly 63 million guests worldwide, a 25.6% increase over the same period last year. Beyond merely attaining that attendance growth, AMC's revenue growth was actually 35.6% above last year's second quarter. Adding in our very tight control of our costs, AMC drove an adjusted EBITDA increase of 391.4% to a highly gratifying $189.2 million. That's a good formula. Revenues way up, combined with quite a tight management of costs. And it generated $150.7 million more adjusted EBITDA in this year's second quarter than was posted in last year's second quarter. It is a simple reality, and hopefully a harbinger of things to come, that as AMC's revenues grow, our EBITDA can soar. With such a sizable increase in adjusted EBITDA, from $38 million in change last year to $189 million and change this year, our net cash provided by AMC's operating activities in the quarter surged to a positive $138.4 million. Such a dramatic turnaround from last year's net cash used in second quarter operating activities of $34.6 million That's a total favorable swing of $173 million improvement quarter over quarter. I would like to repeat those numbers so that all of you on this call and all of you on this webcast hear them very clearly. In the second quarter of 2025, AMC Entertainment delivered a 25.6% increase in global attendance above that of Q2 24, consolidated revenue growth of 35.6% versus Q2 of 24, consolidated adjusted EBITDA growth of 391.4% versus Q2 of 2024, AMC's $189.2 million of adjusted EBITDA in Q2 2025 was just a hair under 5 times the adjusted EBITDA of Q2 2024. Cash generated from our operating activities of a positive $138.4 million showed a favorable swing of $173 million in this year's Q2 versus Q2 of 24. Needless to say, it's all smiles at AMC today. Our second quarter results are a combination of a recovering industry-wide box office and the undeniable fact that both AMC and Odeon are executing so well in so many different ways. Indeed, we shattered all-time revenue records across nearly every per-patron metric. As for the strengthening industry-wide box office, we firmly believe that this was not a short-lived spike, but rather the beginning of a sustained and powerful resurgence for our entire industry. So that expectations are set correctly, the box office in the current third quarter will only be so-so, given some seasonal but not alarming softness. But hold on to your hats for the size of the box office in the fourth quarter of 2025. Hello, Disney's Avatar, Fire and Ash, Tron Ares, and Zootopia 2. Hello, Universal's Wicked for Good and Five Nights at Freddy's 2. Hello, Glenn Powell in Paramount's The Running Man. And hello to so many other wonderful films that will be hitting the big screens in theaters from so many of our studio partners in the fourth quarter of this year. In total, it sure looks like 2025 is shaping up to be the biggest post-pandemic box office year yet, and one which we believe will be some $500 million to $900 million more than that of full year 2024. Even more compelling is the currently envisioned 12-month run rate for theatrical moviegoing after taking out the weak Q1 of 2025 and replacing it with the much stronger Q1 that we anticipate for 2026. Perhaps with an occasional blip here or there, we expect the 2026 box office will radiate with great strength and resonate with theatrical moviegoers pretty much all year long. Of particular note, this year, in 2025, the first quarter was terribly weak. In 2026's first quarter, by contrast, we'll see the spillover benefits from Avatar Fire and Ash's December 2025 opening, which in our view should greatly help to boost the Q1 2026 box office back up to a much healthier level. That should start the year 2026 off right, and we are highly encouraged by the extraordinary slate of films being released throughout the full year. It's our view, and we're far from alone with this optimism for 2026, that the 2026 box office will be considerably larger than that of 2025. Turning back to the performance of AMC and Odeon specifically in the just completed quarter, we've set record after record in this year's second quarter. For the first time ever, AMC's consolidated admissions revenue per patron topped $12, coming in at $12.14. Our consolidated food and beverage revenue per guest jumped to a record of $7.95. And our total consolidated revenue per patron at AMC and Odeon hit an unprecedented $22.26 for us. We believe that these new records powerfully validate the rationale behind our various strategic initiatives and the fact that consumers view moviegoing at AMC and Odeon to be highly attractive out-of-home entertainment experiences. In addition to setting new operational records during the quarter and delivering a powerful earnings report as a result, just as important, we've continued to fortify our balance sheet. As you know, in July, we just closed a series of transformative transactions, including receiving more than $240 million in cash from new debt issuance and the equitization of at least $143 million in debt, with the potential to equitize even more, up to a total of $337 million. We have now addressed all of our 2026 debt maturities, pushing them out to 2029. That's 4 years from now. In so doing, we've put in place a solid foundation to capitalize on what we believe will be our industry's continued growth momentum and our company's continued growth momentum, which should be especially evident in the fourth quarter of 2025 and continuing deeply into 2026. If I had to pick out just one set of words to characterize AMC's strong performance in the second quarter of 2025 and our optimism and our confidence about AMC's expected performance for 2026, it would be these. And I quote myself, impressive operating leverage. As AMC's revenues grow, our EBITDA at AMC can soar. I'll now pass this call and webcast over to Sean Goodman, our CFO, to provide more detail on the financial results, after which I'll return to provide an update on the AMC Go plan and others of our strategic initiatives. Sean?
Thanks, Adam, and thank you everyone for joining us this afternoon. We are pleased to report a quarter in which, as Adam just noted, the team set a number of very impressive records across both our domestic and international operations. Substantial year-over-year industry growth drove our attendance growth, which when coupled with record-breaking per patron revenue and per patron profit, resulted in an outstanding set of results for the second quarter. Allow me to elaborate. I'm comparing consolidated results for Q2 2025 to Q2 of 2024. Global attendance rose 25.6% as we welcomed 63 million moviegoers to our theaters. Total revenue grew by 35.6%, or 34.1% in constant currency, reaching $1.4 billion. Adjusted EBITDA grew fourfold to $189.2 million, and we generated free cash flow of $89 million, a $168 million improvement compared to the prior year's second quarter. These results were achieved through admissions revenue per patron growth of 7.5%, or 6.2% in constant currency, to an all-time record of $12.14. At the same time, food and beverage revenue per patron climbed 8.3%, or 7.4% in constant currency, to an all-time record of $7.95. And total revenue per patron grew 8%, or 6.7% in constant currency, to yet another all-time record of $22.26. Total revenue per patron is now up approximately 43% compared to pre-pandemic 2019. This is driven in a large part by an approximately 56% increase in food and beverage revenue per patron. Not only did we achieve the per patron revenue records that I just noted, we also grew our contribution margin per patron by 5.2%, or 3.9% in constant currency, to $14.48. Note this is approximately 48% higher than pre-pandemic 2019. And you'll recall that we calculate contribution margin as total revenue minus both film exhibition costs and food and beverage costs, and this is then divided by total attendance to get to a contribution margin per patron. This is a measure that is intended to provide an indication of the incremental profit that we generate with each additional guest. Based on all the above, it should come as no surprise that the total admissions revenue hit a Q2 post-pandemic high of $762.6 million. And this is an important one. Total food and beverage revenue hit an all-time AMC high of $500 million. Our results highlight the significant operating leverage, as Adam just mentioned, that is inherent in our business. With attendance up 25.6%, our adjusted EBITDA margin in Q2 2025 was almost 1,000 basis points above last year's second quarter. It's worth noting that thanks to operating efficiencies, despite consolidated Q2 2025 attendance being some 35% below pre-pandemic Q2 of 2019, which is the quarter that holds the record for the highest quarterly attendance in AMC's history, thanks to the spectacularly successful Avengers Endgame. Despite being 35% lower attendance, our consolidated contribution margin in Q2 2025 was just 4% below Q2 of 2019, and our consolidated contribution margin per screen was in fact 9% above Q2 of 2019. This all illustrates our conviction that the industry does not need to fully recover to pre-pandemic box office levels for us to achieve pre-pandemic levels of adjusted EBITDA. Up until now, I've focused on the consolidated results and record achievements. But note that both our domestic and international theaters operated at record levels during the quarter, and that food and beverage revenue per patron and food and beverage profit per patron have never been higher at both our domestic and our international theaters. The second quarter results reflect the impact of our continued focus on creating an unrivaled guest experience through industry-leading innovations, coupled with our enviable theater footprint and the most comprehensive and growing selection of premium large format offerings. Another driver of our success is the actions that we've taken to optimize our footprint and enhance profitability by renegotiating leases, closing underperforming locations, and investing in high-performing new theaters. Since the beginning of 2020, we've now closed 204 theaters and opened 65, resulting in a net reduction of 139 locations, or nearly 14% reduction. Notably, in just the last 18 months, we've closed 42 theaters and opened 6. Let's now turn briefly to our balance sheet. We ended the quarter with $423.7 million of cash and cash equivalents, excluding an additional $51 million in restricted cash. From a CapEx perspective, for the full year 2025, we expect CapEx less landlord contributions to be in the range of $175 to $225 million. Our capital allocation priorities remain unchanged. 1, ensuring adequate liquidity. 2, reducing our financial leverage. 3, enhancing our existing circuit. And 4, pursuing high-return, growth-oriented initiatives. With the first 2 capital allocation priorities squarely in mind, as Adam noted, we have recently taken important steps to strengthen our financial position. The collaborative and transformative transactions announced in July strengthen our financial position by 1, enhancing liquidity and addressing near-term debt maturities by raising more than $240 million of new capital before fees and expenses that are primarily being used to repay all debt maturing in 2026. And two, lowering our financial leverage by equitizing at least $143 million of exchangeable debt with the potential to equitize up to $337 million of such debt in total in the future. These actions, which were supported by approximately 90% of our term loan lenders, represent a substantial vote of confidence in AMC's future and give us a runway to execute on our strategy and capitalize on the industry recovery. Since the beginning of 2022, we've now lowered the principal value of our debt and finance leases by more than $1.1 billion, and we've repaid $284 million of deferred leases. All of this for total debt and deferred rent reduction of $1.42 billion in about 3.5 years. Looking forward, we expect some seasonal box office weakness in the third quarter, when we will also be up against some tough prior year comparisons. However, we have high expectations for the fourth quarter, which may see the strongest quarterly box office in 6 years. From a free cash flow perspective, we're pleased with the strong Q2 results, and while Q3 may be somewhat challenging, we continue to anticipate being free cash flow positive for the 9-month period ending December 31, 2025, assuming that the box office performs in line with our expectations. In conclusion, this quarter results reaffirm our conviction that our strategies are working and that AMC is extraordinarily well positioned to thrive as the industry continues along the recovery glide path. And now, I'll hand the webcast back over to Adam.
Thank you, Sean. I'd like to start a discussion of what comes next for AMC by first talking about some major pricing actions that we have recently taken. Showing our pro-consumer attitude, on Tuesday, July 8 and Wednesday, July 9, just a month ago, we kicked off our new 50% off Tuesdays and Wednesdays discounted ticket pricing strategy here in the United States. Bargain hunters can now find cheap admission ticket pricing at all of our showtimes on 2 days of the week at the vast majority of our U.S. theaters. Discount Tuesdays has long been a staple in our industry, and it built up Tuesdays to being AMC's highest non-weekend attendance day of the week. New this past month, we changed our messaging. Instead of it being referred to as Discount Tuesdays, it's now called 50% Off Tuesdays, a message that we expect will be a far stronger communication to potential bargain-seeking moviegoers than merely saying Discount Tuesdays, as we've said for years. Why? Well, with our new messaging, potential guests instantly can see and instantly can understand the magnitude of the discount level that we're offering to them. And of course, it's a sizable one. More than that, though, we now have extended that same pricing philosophy to Wednesdays as well. We're doing so with the hope that, just as been the case for Tuesdays for years now, we can turn Wednesdays into a high patronage day for AMC in the United States. Currently, by contrast, Wednesday heretofore has been our single lowest attendance day of the week. We're only 4 weeks into this important new pricing initiative, so it's too early to declare victory yet. But we definitely have seen attendance spikes, and we are highly encouraged by the starting attendance numbers that we've seen so far as a result of the changes we've made in the Tuesday messaging and the extension of those same discounts to Wednesdays at our U.S. theaters. 2 other really important things to note about our 50% off Tuesdays and Wednesdays effort. First, this discount is only available to members of our AMC Stubs loyalty program, but that includes any instantaneous new member signups. So that gives consumers a powerful incentive to join our loyalty program, which in turn allows us to track their patronage and market to them directly by communicating with them often. It's an ingenious acquisition device for us to gain new loyalty program member signups. Second, and this may be something that many of you are unaware of, because we knew that we would be doing so much, and so visibly so, to offer bargains to bargain seekers. Knowing that, having a discount and Tuesday and Wednesday effort in the works also gave us the courage a couple of months ago to broadly raise prices at our U.S. theaters on Thursdays, Fridays, Saturdays, Sundays, and Mondays when most of our patronage takes place. That effort has worked out very well, and you'll see that in our second quarter numbers, for example, AMC's average ticket price in the U.S. often meaningfully exceeds the prices realized by some of our most important competitors. The yield management strategies differ at our European theaters, but in looking back at the completed Q2 performance, again, you will see that we've had considerable success in realizing more ticket revenue per guest than was the case in prior quarters for us, and is the case still for so many others in our industry. Next, I'd like to turn to the efficacy of some of our most important marketing programs. Our U.S. loyalty program, AMC Stubs, has movie database purchase activity collected on some 36 million U.S. households. That's around 90 million people in total. About half of our total U.S. ticket buying guests are members of our AMC Stubs program, playing both for their points and to receive their other recognition benefits that come to them from being a Stubs member. I am particularly excited that on January 1st of this year, we launched a new VIP tier within the Stubs program, a new level between the heretofore Insider tier and the Premier tier. In just 7 short months, we are already pushing close to 500,000 active members in this newly created VIP tier. It's an incredible success story for AMC. Then there's A-List, our monthly subscription program, which also is still a massive hit for AMC. Launched in the middle of 2018, A-List members see an average of about 30 movies per year at an AMC theater. Just recently, like literally in the last few weeks, A-List was ebullionly profiled in the pages of both the Wall Street Journal and the Los Angeles Times, the latter of which described A-List as having cult-like strong consumer appeal, especially with the younger Gen Z. That's so good for AMC, not the articles, but the fact of the appeal of our program to Gen Z customers, because it portends so well not only for our current patronage at AMC theaters, but our future patronage as those A-listers stay with us for years and years to come. Paid membership in A-List is roaring hot. It's currently running up about 15% year over year. Our similar subscription program in Europe, Limitless, also has considerable consumer appeal, especially so in the United Kingdom. Another marketing step forward for AMC Entertainment is this one. In looking back to the arrival on scene in 2021 and since then of retail investors, we knew that they were interested in the prospects of AMC financially. It was obvious to us that we should set out to convert their interest in our company into securing their brand loyalty as movie-going customers as well. So we created the AMC Investor Connect program, which was individually enrolled in. There was no automatic enrollments, no group enrollments. People just sign up one at a time. And incredibly, AMC Investor Connect now has some 1.7 million enrolled members, another marketing success for AMC. And finally, There's our consumer advertising featuring Nicole Kidman. It certainly has hit the zeitgeist both in the United States and across the United Kingdom and Europe. All of us at AMC and all of us at Odeon are existentially proud that Nicole Kidman continues to be such a central part of our marketing activity. Speaking of global celebrity, the movie distribution effort that was such a success for AMC, starting with Taylor Swift and Beyonce in 2023, continues to deliver for us. Last year, we did a Billie Eilish album release listening event with Interscope Records. And just this past weekend, AMC exclusively played what I describe as an Eminem love letter to his legion of fans, a documentary called Stands. This was an effort championed by Eminem himself, and you'll see repeated mention and praise of this documentary repeated with prominent rappers' social media postings. We continue to expect in the future that more interesting film products will come our way directly. And finally, let me turn to the AMC Go plan. As you know, it's a comprehensive effort to continue positioning our company to fully seize the enormous potential of a resurgent industry-wide box office. Here are just a few of the actions that we're taking right now under the auspices of AMC Go, because AMC Go, focused as it is on offering our guests premium experiences aplenty. We already have started the work to double the number of our already existing IMAX auditoriums that have been stepped up in their quality to the much improved IMAX with laser projection technology and enhanced sound systems. We also add some additional IMAX screens as well to our current worldwide total of 220. Paying close attention to the quality of the IMAX experience that AMC offers makes complete sense, given that currently about half of all the IMAX screens in the United States, for example, are located at an AMC theater. Just as we're growing our IMAX footprint, we're also growing our Dolby Cinema footprint. We are going to be adding 23 new Dolby Cinema screens in the U.S. just in 25 and 2026 alone to our current worldwide number of 178. And we'll continue to add more Dolby Cinemas in 2027 and beyond. Over the next few years, we also hope to expand our house brands. That is to say, we expect to more than triple the number of our house-branded Prime and AMC PLF auditoriums, eventually getting up to 100 or more Prime and AMCs, and that's in addition to the 82 house-brand iSense PLF screens that Odeon already has internationally. Looking past the PLFs per se, in an AMC and Odeon exclusive, we now already have open for business more than 120 XL branded extra large screens in the United States and across the Atlantic. XL was launched by us with our first such screen only a year and a half ago, and yet by this year end, we should have more than 150. And by next year end, meaning by December 2026, we should have close to 350 XL auditoriums open and available for our guests. Our XL branding initiative is a smart, cost-effective way for us to shine a spotlight on some of the biggest and most impressive auditoriums in our circuit. In the U.S., all with giant screens that are at least 40 feet wide and featuring sharp and crisp 4K laser projection. And in all cases, there'll be prominent XL branding that's highly in evidence across our theaters, our website, our mobile app, and lets guests easily identify and select this upgraded experience that is offered only by AMC and Odeon. And finally, We continue to broadly equip our theaters with state-of-the-art laser projection. Right now, more than 2/5 of our U.S. screens now feature laser projection, which, through brighter, bolder, and more energy-efficient projection, so noticeably improves the dazzling images cast onto our giant silver screens. By year-end, this year, more than 55% of our U.S. screens should have laser projections installed. Laser at AMC is the future, and that future is now. These premium offerings are working. We're seeing strong guest satisfaction, greater capacity utilization, increased frequency of visits, higher loyalty engagement, and increases to our realized prices as we deliver on our mission to offer more premium experiences than any other movie theater circuit in the world. AMC already is the home of premium experiences more than anyone else, and we are going to continue to expand on that lead. In so doing, we offer to AMC and Odeon guests the best movie-going experience imaginable, and we believe that's a key to driving long-term profitable growth in our business as a result. As I close today's prepared remarks on this call and webcast, we recognize that there's still much work to be done on our path to a full recovery. The industry box office is still well below what it was pre-pandemic, and yet, as Sean outlined, because of the dramatic increase in our contribution per patron, we actually can see EBITDA levels climb higher than pre-pandemic levels on much lower attendance and a much lower NCI box office. We've become remarkably efficient in running our business as a result of all the steps we've taken to improve our performance over the past 5 years. But more than just that, it is also a fact that we could not be more confident about the resurgence of the industry box office. It's finally a tailwind for AMC, not the headwind that it's been since 2020. With a strong second quarter results as our foundation this year, plus the bold actions that we're taking to harness the momentum of that resurgent box office, we believe that the future is exceedingly bright for AMC. Remember my mantra that was proven both by our fourth quarter 2024 results and our second quarter 2025 earnings success. In Q4 of 24, our revenues were up by more than 18%, and that caused our adjusted EBITDA year over year to triple. In Q2 of 25, our revenues were up by more than 35%, and that caused our adjusted EBITDA to nearly quintuple. Impressive operating leverage. As our revenues grow at AMC, the adjusted EBITDA of AMC can soar. Sean, with that, let's move to questions from equity analysts and from our retail shareholders.
Thank you. At this time, if you would like to ask a question, please press star one now on your telephone keypad. To withdraw yourself from the queue, you may press star two. Once again, that is star one to enter the queue. One moment while we queue. And once again, that is star one. We'll take our first question from Eric Wold of Texas Capital Securities. Your line is open.
Thanks. Good afternoon, everybody. A couple questions. I guess first off on pricing. So you talked a lot about pricing out. I mean, you obviously mentioned the 50% off Wednesday price that you implemented about a month ago to bring in the bargain hunters, and you also mentioned you took out or felt comfortable to raise prices every other day of the week except Tuesday. And I think you still have surcharges on some of the blockbuster films kind of opening weekend. So I guess you're comfortable raising prices on tickets kind of in this macro environment. Maybe talk a little about food and beverages. What are your thoughts there once you get the consumers into the theaters? Are you taking up prices on food and beverage? Are you more focused on driving incidents and getting people to the counters instead of taking up price? Where's the focus there, and what is the best way that you found to drive incidents recently? What's worked the best there?
First of all, hello, Eric. Welcome back.
Thank you.
Maybe you're a good luck. Maybe you're a good luck charm. You're back and we delivered a quarter to end all quarters. So first of all, on pricing of tickets, I believe that the better messaging on Tuesdays, calling it 50% off Tuesdays instead of discount Tuesdays, is going to explain the level of discount, the magnitude of discount, such that we're going to boost our Tuesday revenues by the change in messaging. I also believe that because we're extending that Tuesday pricing philosophy, which has worked so well for more than a decade in the movie theater business, that we have the chance to do something with Wednesdays. We don't sell any tickets on Wednesdays now. I should say before July 9. We didn't sell any tickets on Wednesdays. So the price we charge on Wednesday doesn't really matter when you don't sell any. And I'm actually hopeful that we can start to see Wednesday admission revenues rival Tuesday admission revenues, turning what is now the poorest day of the week for attendance into the strongest non-weekend day of the week for attendance, that being Tuesday. As I said, the early signs, you can't declare victory in 4 weeks, but the early signs are quite encouraging that consumers are noticing. So that's Tuesday, Wednesday down. But Tuesday, Wednesday down, as I said before and as you repeated, meant that Thursday to Mondays we took up. And we've seen no pushback on the prices we collected for tickets. We had an average price 2 weekends ago over $14 in the United States. Those kind of eye-popping numbers, given where pricing has been in recent years and where it is even today at some of our competitors. The other thing that gives us confidence in having taken those pricing actions, and I want to be clear, I comply with the law very carefully. I'm making no comments about what we will do with pricing going forward. I'm only talking about actions that we've taken on pricing retroactively in the rearview mirror, which we can't talk about the former and we can talk about the latter. I would point out that our confidence in what the consumer is willing to pay to go to a movie, in part comes from the success of our PLF auditoriums, because our PLF auditoriums often charge a $6 or $7 upcharge for an IMAX or a Dolby Cinema screen instead of a regular screen. Our primes sometimes get $3 to $6 more than our regular auditoriums. Our Real D 3D screens usually get $3 to $4 more than our regular screens. And these formats have been killing it. If you look at when we put a movie on sale, guess what tickets sell first? It's our premium large format screens at prices that are 30, 40, 50% higher than our regular auditoriums. That suggests to me that the consumer has demonstrated clearly that it's willing to pay up for the best. And so therefore the challenge for AMC is to deliver them the best. And that's why we're putting laser projection into our regular auditoriums. As I said, as we sit today, 43% of our screens in the U.S. now have laser projection. By year end, 55% of our screens will have laser projection. It increases the light levels on the screens by 50 to 100%, makes the picture much brighter, much sharper, and that greatly improves the quality of experience that our guests get, hence our confidence in having raised prices a couple of months ago. Now, moving to your food and beverage question, The answer is we're doing all of it. So we're focusing on a variety of things. Number one, menu variety, so that our overall menus, not only at our dine-in theaters, but also at our regular theater concession stands, are more interesting and more appealing to our guests. Second, we've added because we've added so much variety to the experience, we've been successful in selling more units per transaction to a guest. So a guest who used to buy one product now buys two. A guest who used to buy two now buys three. A guest who used to buy three now buys four. We've also had dramatic success in getting more people to stop at the concession stand and actually buy from us. It is a stunning statistic how many people can go to a movie theater, just pay us their historic $12 or more recently $13 or $14 ticket price to get in. That's for an average screen, not for a PLF screen. More like 18 or 19 for a PLF screen. Anyway, who are just able to pay us the $12 to get in the door, and that's it. And then they go to their seat and they don't buy a thing. The number of people just at AMC in a year who go into our theaters and buy nothing from us at all at the concession stand is more than the entire attendance of any Major League Baseball team in the entire American League or the entire National League. It is amazing. And yet, one of the things that's caused real success for us ever since we reopened from COVID 5 years ago is more and more people are no longer bypassing the concession counter. They're stopping at the concession counter, and they're taking advantage of all the things that we now offer. There's a lot of creativity in that. Movie-themed drinks, which we didn't do many years ago. We now have movie-themed drinks just about every weekend of the year. And they're very profitable for us. But it's also true with having 4 kinds of popcorn flavors instead of 1. Having 140 drink flavor choices coming out of a freestyle machine instead of being some movie theater that has a little fountain where they can dispense 8 or 10 or 12 different flavors for the guest. I could go on and on about the variety of things that we're offering our guests, but that's causing more people to stop the concession stands and buy. It's causing more purchased items per guest. And of course, yes, we have taken some pricing action up as well.
Got it. If I can squeeze one in as well. One more.
Go ahead.
You signed the amended agreement with National Cinema Media a few months back to extend the amount of advertisements prior to the showtime that started at the start of July. Reports out recently that you may now be cutting that back already. I guess any comments there that is true? If you are cutting it back, what's leading to that decision to do so quickly after extending it?
Well, first of all, so the reports that you're hearing are accurate and inaccurate at the same time, and you sort of got half of it, but not all of it right. So, first of all, there were 2 rationales for why we did the deal we did with National Cinema Media, and it's something we resisted for many years because we don't like lengthening our pre-show, and we don't particularly love deluging our customers with ads for third-party products. But the first rationale is our 2 largest competitors, Regal and Cinemark, have been doing this for like 6 or 7 years, and we did not. And we noticed that their market share was not being hurt by these actions, and we were foregoing literally tens of millions of dollars a year. And we made this decision in the first quarter, which is a pretty bleak quarter for revenues and profitability. And we really thought it was irresponsible to pass up the monies that our competitors were taking. But there's a second interesting reason. When we bought Carmike in 2016, we inherited the Carmike contract with NCM's biggest competitor called Screen Vision. And Screen Vision is in place in a significant number of our AMC theaters. Under the terms of the Screen Vision contract, the Screen Vision pre-show played until 5 minutes after showtime, whereas the NCM contract called for the pre-show program, as it were, to stop at showtime. So already within the AMC circuit, we had a disharmony, where at some of our theaters, the pre-show with ads continued for 5 minutes post-showtime, as the NCM theaters did not. The first change with the NCM contract is we allowed NCM to have the same 5 minutes of extra pre-show that Screen Vision has had since we bought Carmike in 2016. We saw no pushback at our Screen Vision equipped theaters for the length of our pre-show. The only other change is this 1 minute platinum spot that is going before, I believe, the second to last trailer prior to the start of the movie. So those are what we added in with NCM, and as I said, it's worth tens of millions of dollars a year to AMC in bottom line EBITDA growth. Now, the press reports that said we're actually going to cut some things back, we're not cutting back the agreement that we put in place with NCM. That is contractual. That is contractual for many years to come. But what we are going to try to streamline a bit is we run about 4 minutes or so of AMC marketing material and fluffy silence is golden and turn off your cell phone and throw, the things like that as part of our whole pre-show experience. We think we can take, it's like 4 to 5 minutes in length. We think we can easily take 2 to 3 minutes out of that. Another thing that we have to think hard about is we carefully surveyed the number of trailers that we show before the feature film and the number of trailers that our largest competitors show. And it looks to us like we're showing 1 extra trailer more than our principal competitors, which adds another 2.5 minutes or so to the length of our pre-show package in total. And we knew that when we did the NCM deal, we might have to make a trade-off. If we're going to add 6 minutes of what's called NCM time, we might have to reduce a trailer and might have to edit down some of our marketing fluffier stuff in advance of the feature film. And I mean, I'll give you a perfect example. Right now, like IMAX and Dolby is a very successful formats for us. And we put a 1 minute promotional teaser about IMAX or Dolby in front of every feature film. We think we can cut back to 45 seconds. It'll be, in our view, just as effective, just as impactful. We'll tell a great IMAX story. We'll tell a great Dolby Cinema story. But it's 15 seconds saved. 15 seconds here, 15 seconds there. It adds up. We think we can shave 4 or 5 minutes out of it. So it's not that there's been a change of heart. We always knew that when we did the NCM deal, that we would probably have to shorten at the same time we were lengthening, so that those two vectors offset each other and balance each other out. We know that some consumers love the trailer packages because they get to see what's coming. And we know our studio partners love the trailer packages because the best form of advertising that they'll find anywhere is putting their movie product right in front of moviegoers' faces. But we also know that some of our other consumers think the trailer packages go on too long, and we're trying to find a happy medium. And we're also doing a better job of telling people when the movies will start, so that for those people who don't want to get their trailer time, they can come a little later, or if they're anxious, they don't need to be running in the door at the single dot of showtime like they're going to miss the movie. So anyway, that's the reaction to the whole NCM and pre-show story.
Got it. Thanks, Adam. Appreciate it.
Thank you. We'll take our next question from Chad Beynon of Macquarie. Please go ahead.
Good afternoon, guys. Thanks for taking my question. Nice quarter. Wanted to ask about just the overall portfolio, Adam. And Sean, you went through the net closures over the past couple of years. I think this was one of the first quarters where there was almost zero net closures sequentially. So with that in mind, can you just talk about, given the profit outlook and the more positive view on the industry, are we at a point where we might start seeing, net adds going forward? Obviously understanding that leases come up on an annual basis, but just kind of thinking about the portfolio and the cash flow per screen. Could this start to be a floor in terms of the number of units in your portfolio? Thank you.
Well, thanks for the question, Chad. There was one really important statistic that Sean left out when he bragged about 205 closures and 65 openings. Was it 205 and 65? 203, 2 something, 204 or something? 200 and change and 65 openings. What he didn't mention is that the 65 openings are outgrossing the 204-ish closures. So we're focusing on the wrong statistic by focusing just on the number of theaters that we closed. What's more important is the profitability of the theaters that we're opening versus the profitability of theaters that we're closing. And in the case of the theaters that we closed, most of them were losing money. When you look at the theaters that we're opening, we've opened hit after hit after hit. There are theaters that we've opened in the last few years that are amongst our highest grossing theaters in the entire United States. What come to mind, the Grove in Los Angeles, Americana brand in Los Angeles, Porter Ranch, also in Los Angeles, Topanga 12, also in Los Angeles. The Grove and Americana are two of our 10 highest grossing theaters week in and week out. Porter Ranch and Topanga, they're in the top 25 highest grossing theaters, or the top 50 highest grossing theaters out of 540 week in and week out. And as you take the collective of it all, the theaters that we're opening far outshine, and they're shiny and they're new and they're in great locations today. They're far outshining the 25-year-old theaters that are somewhat moribund that might have been in bad locations today. They were good locations 25 years ago when they opened, but those locations aren't as compelling today as they once might have been at the turn of the 21st century. So again, but about 10% of our leases come up for renewal every year. So figure, 100-ish theaters come up for renewal. I wouldn't be shocked if we closed 10 of them. So I don't know that we're at an absolute floor, but what you can assume is that when we close a theater with almost 100% reliability, we're not closing a profitable theater. We made a lot of money. We're closing a theater that was a drag on our EBITDA, that was lowering the consolidated EBITDA of the company. So as it closes, the EBITDA of the company rises. Will we get to a point where we still have, that many, excuse the expression, pig theaters left on our system, having closed 200 of them, but we have a few. So, maybe we close 5 to 15 a year for the next few years, but we're continuing on the hunt for new theaters in A locations. We're just opening in Chicago, a theater that we believe will be one of the highest grossing theaters in Chicago. And again, the theaters that we're opening are grossing more than the theaters we're closing, and they're producing more EBITDA than the theaters that we're closing. At some point, I think we'll move to a net add of theaters rather than a net decline of theaters. I don't know that we're there yet exactly, except one key circumstance, and that is we continue to be offered portfolios of theaters on an M&A basis, sometimes at very attractive prices, like really attractive prices, like 3 or 4 times EBITDA kind of attractive prices. And so I do think if you look forward over the next 36 months, maybe, you'll see that some of our biggest additions of theaters, which might far outstrip some of the closures, may come to us in interesting acquisition opportunities where we can bring theaters in good condition into our fleet at very attractive M&A expenditures.
That's interesting. Okay, thanks for all that, Adam. And then lastly, quickly, Sean, just on the Big Beautiful Bill benefits to CapEx generating companies. Can you just talk about, as you see it now, maybe what some of the cash benefits could be, either from a cash tax standpoint or a cash shield standpoint in future years? Thank you.
Sure, thanks. So obviously, as a result of that bill, we get 2 key benefits. The one is the depreciation deduction, and the other is the interest deduction based on EBITDA as opposed to EBIT. So that has a benefit for us, but bear in mind that we have NOLs that will run probably through 2026 or so. So the cash benefit will only be in future years, 27, 28, and going forward from there. So it's beneficial. It increases the NOLs for future cash deductions, but it's not a short-term cash benefit. It's more of a longer-term cash benefit for us.
Great. Thank you both. Appreciate it.
Yeah.
Thank you. We have no further questions at this time. I'd be happy to return the call to Adam Aron.
Thank you, Leo. We're going to now take a couple of questions from shareholders. Sean?
Sure.
What came in from our retail investors?
Sure. So just briefly, the first question is just asking if we have any reaction to Skydance's acquisition of Paramount that's now just closed.
Yeah, we sure do have a comment about the Paramount acquisition from Skydance. First of all, we've had a very good relationship with Paramount across many generations of its leadership. I'd especially like to thank Brian Robbins and his executive team. They've been superb partners for AMC over the course of the last many years. At the same time, though, we are excited by Skydance's acquisition of Paramount because Paramount has been cash hampered in recent years, which has caused them to greenlight fewer movies than they might have liked to. It appears to us that Skydance is cash rich, and it would be our expectation that Skydance will be releasing more movies coming out of Paramount than Paramount has been releasing in recent years. You'll also recall that David Ellison is no rookie in the movie business. He's been a prime force in some of the most important movies that have come out in recent years. And what especially comes to my mind is Top Gun Maverick, which in my mind is the single movie that you can point to since COVID hit in 2020 that turned the movie theater industry around. It set us back on a course where studio, with its $1.5 billion worldwide gross, it finally reminded various studio chiefs that the future was not only in their streaming services, but also in their theatrical releases. And that sometimes the most successful movies on streaming services were those movies that had a great theatrical release. Point in case, what was the highest movie watched on Paramount Plus? Top Gun Maverick. Why? Because it had a spectacular $1.5 billion theatrical release worldwide. So the fact that David and Skydance want to make more movies, and the fact that they have experience in making really good movies, and then you can add in the fact that the new president of Skydance is going to be Jeff Shell, who used to be the chairman of Universal Studios. And we've had a superb relationship with Jeff Shell over the past decade. And I've talked to Jeff. I know that he's excited to be back at the helm of a major studio. Well, he's got more than the studio, of course. He's got the whole enchilada. But his influence over what happens at Paramount will be profound, and we think it's going to be very good for theatrical exhibition.
Terrific. Do you want to comment about AMC distribution? We just made the M&M announcement over the last weekend. Anything you'd like to point out on AMC distribution and future opportunities there?
Sure. We obviously 2 years ago, we had these massive successes with Taylor Swift and Beyonce, and we've had lots of conversations with lots of world-class artists. Since then, some deals got very close, but then didn't materialize. Others have happened. We did this Billie Eilish album release a year ago. We did this Eminem documentary just this weekend, which was apparently a movie that was beloved by his fans. It got some spectacular scores on Rotten Tomatoes, I hear. We're in several conversations right now with more world-class talent about more projects coming out as soon as 2026. It's also given us the courage to look more broadly at how movies are distributed, and we had success in distributing some concert movies. Maybe there are some non-concert movies we could help bring into theaters as well. We'll see. The vast majority of our product is always going to come from our studio partners, of course. But I think there's opportunistic profit opportunity. There is plenty of excess capacity in the movie theater industry. I'm an old airline guy. If an airline had fewer than 75% of its seats filled, an airline marketer would have slashed his wrist. In the movie theater industry, we're a church built for Easter Sunday. We only sell less than 20% of our seats in the course of any given year. There's tons of capacity. We certainly have the screens to show more product if there's more product to be made.
Terrific. And Adam, finally a question here on AI and the impact on our business and the potential benefits. I wonder if you'd like to comment on that.
So, every company in America is talking about AI. Every board of directors in America is talking about AI. We're no different, so we're talking about AI. And the AI revolution is happening very quickly. I know that I've completely abandoned Google in exchange for ChatGPT. You just see it in every aspect of our company. There's opportunity to use it. We're already using it in software development and software optimization and software testing. We're using it in image creation for marketing. We're using it for the automation and simplification of tasks here in our corporate office. We process our accounts payable using AI. We've got teams in our theaters looking at AI and how it can be used to address operational issues in our theaters. We're using AI already in demand planning for our inventory management. But we've just scratched the surface. I really do think going forward there'll be an opportunity for us to take advantage of the powerful AI technology to assist with our pricing, with our film scheduling, with our customer service programs and our consumer response programs. And there's more, and the more, which might be the most exciting of all, we've actually been talking and are in conversations right now about making small investments in some AI technology-enabled companies whose prospects are related to the movie industry, related to entertainment, and whose prospects are incredibly bright. And we'd like to benefit fully from the AI revolution that clearly is already at hand.
Terrific. I think that's all the questions that we have at this point.
Great. All right. Well, look, thank you, everybody, for joining us today, for staying with us. The second quarter of 2025 was one that made us very excited here in Leawood, Kansas. We delivered big numbers, almost a quintupling of our EBITDA, We are ahead of the street on just about every expectations you all had for us. And we think this is just the beginning of something that's going to happen quarter after quarter, starting in the fourth quarter of 2025. Remember what I said. In the fourth quarter of 24, revenues were up 18%, EBITDA tripled. In the second quarter of 2025, revenue was up 35% and change. Our EBITDA almost quintupled. There's enormous operating leverage in this business. If we can finally have the wind in our backs with rising industry revenues, the sky's the limit for the EBITDA that AMC can generate as a result. Thank you for joining us today. We'll talk to you in 90 days.
This does conclude the AMC Entertainment Holdings Incorporated second quarter earnings webcast. You may now disconnect, and everyone, have a great day.
Well. I didn't learn a whole lot new during that call. I don't know how you guys feel about it. Let me turn off this monitor. We don't need that. AMC trading at 301, down 2 pennies from the close. Still up 2.5%, 3% from Friday's close. We did at least get a mention of AI at the end of that call. Davindo Vasher, if you're wondering what that music is, that is a new subscriber to the channel or a new member of the channel. Thank you guys for your support. I do cover the entertainment industry, pretty much all the tickers in it. Just so we're clear, I don't own any AMC at the moment for reasons I have disclosed since November of 2024. You can check the price action since November 2024 and see that my gut feeling has been correct. I trade some other tickers in the industry. I cover all of these companies. I think that at some point when the dilution risk for AMC is over, there could be a good entry for us. Very, 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 very patient swing traders who are patiently waiting for a bottom feeding entry. I don't know that we're at the end of the dilution rope. We've got a proxy coming up in October that will include more dilution, would be my expectation. How much? I don't know. In what manner? I don't know. I'm kind of just patiently sitting out until I see what they say in October. Is that the right decision? Heck if I know. Could there be upward volatility between now and October? Heck if I know. Maybe. You know what? If there is some surge in momentum because Roaring Kitty comes back or whatever, I'm sitting here every day. I can always jump back in. I'm not saying I'll never buy. I'm just saying I got to pay attention to the chart. I got to pay attention to what the company's telling me is coming, and a proxy statement is coming. And I still am a little bit unclear on how good Q3 is going to be. Do you think it's going to beat Q2? I do not. I do not. Q4, I feel good about. 2026, I feel good about. I just got some unknowns that I'm watching right now. It doesn't mean I hate AMC. It means that I don't like buying stock and then watching it go red over the next week or the next month or the next corporate action. I want the unknowns out of the way. I don't mind overpaying if I can have the risk out of the way. i.e., you know, if the news comes out in October and let's just say there's no dilution and the price goes up, I'm okay with that. I'd rather come in after the risk is out of the play, even if I got to pay a little more than $3.02. That's cool with me. I'm not at a point where I want to take on more risk. I can move that money in other trades for the time being while I see how this plays out over the next 90 days. And I think we'll have a lot to talk about when we get that proxy in October. That is my expectation. And I'm carefully watching the Q3 box office. I don't have a lot of exciting titles to tell you about in August and September. But, you know, I don't think it's going to be horrible, but it's too early to call. Thank God for July. Thank God for July. Blue Sky says 2.2 billion. I was ruminating on the Q3 box office today as I was preparing my Q2 thoughts. That video dropped, by the way, right before this live stream. So if you haven't watched my Q2 summary, please go watch it. That video is out on the channel as of about 2 hours ago, giving you all my thoughts on the Q2 results, how the model did, and what I'm looking at, thinking about for the next 6 months. I don't know if I'm as pessimistic as you, Blue Sky. I'm not going to say 2.2 billion. I mean, we're at what are we at right now? 1 point what? We're at 1.4. So you think in the next 7 weeks, the best we can get is 800 million. I mean, gosh, I hope not. I think it'll be slightly better than that. I don't think it'll be 2.665 like in 2024. But way too difficult for me to give you guys a reasonable guess this early, other than to say, I think it'll be worse than Q2. Just because, Dave, the reason that is there's not a lot of blockbuster titles the remainder of this quarter. I mean, go in on Box Office Mojo and look at the calendar and look at August releases and September releases. There's just no standout huge movies. It'll be solid weekly numbers, but not enough to beat Q2, I think. I mean, what do you see here that jumps out at you? Just not a lot. Even and I pay attention to forecasting services. Even some of these titles that people are going to talk up, they're just not forecasting massive numbers. When I say people, I mean AMC investors promoting on social media. They're going to talk up a lot of these titles. They're going to be fun movies. They're going to be a couple of exciting titles. Nobody's forecasting huge numbers for them. So, yeah, I don't know what to say. Sound of Music, 60th anniversary. What else? Yeah, Toxic Avenger, Yolo Ono. That's one of those titles that I think is fun. It's going to be exciting. Numbers, I don't think will be there to the extent that we want. Didn't I say no dilution till December? I think, the company is mostly out of shares at this point. So I'm not forecasting any dilution before December. I mean, they're almost functionally out of shares. Right? Aren't they? With the July restructuring that they did. They might have a few in their back pocket, but not any massive amount. But the market, I think, is going to be thinking about what's on that October proxy. They can read the debt documents. They can see that there is language in those July debt documents talking about issuing more shares if shareholders approve it in December. That tells me that we should expect something on the October proxy statement. Won't be kicked off till after the December vote. Yes. Hopefully we're all on the same page. But the market is smart enough to think forward. What does that mean? there is what I call risk of dilution overhang on the stock price that's going to keep it down, I think. I might be wrong. I hope I'm wrong. But if the price just kind of languishes, that is going to be the narrative that I go with, that people are expecting, there's going to be more dilution. So what's the point of running the price up? What's the point? What's the point of big institutions coming in and buying? They're going to just sit back, just like I'm doing, and wait and see what is on the table for October and November. That's just my thought. I could be wrong. Roaring Kitty, where you at? Where you at, bro? We need a meme stock basket pump. Maybe if GameStop gets a little pump, AMC goes with it. GameStop needs volatility brought back. If you didn't watch my video yesterday on GameStop, go watch that one and you'll see what I mean. Karate Kid already came out, didn't it, Jeffrey? There is no more big movie coming out in August or September. How do I see the economical situation as impact for AMC? I'm not too worried about it. I still like to believe the narrative that we often hear, that even if there is economic downturn, even if there's economic pressures, people are still going to go out and do some fun things to take their mind off of what's going on out there in the world. And that includes going to a movie, a far cheaper option than going to a sporting event, especially if you're an A-list member or a Stubbs member. So I'm not too worried about it. Doesn't mean that I will be right, but right now I'm not too worried about it. Ruby says, do you think the shorts exit before the vote and K-Shoulders vote no? That is a good question. I think if I were a short, I'd be thinking AMC is going to make sure that vote goes through. Same thing that I told you guys in 2023. AMC is going to make sure that vote goes through. The Popcorn Project folks on social media hate me because I told you that I was 99% certain that the vote would go through. Then I told you I was 99% certain that Judge, what was her name? Whatever her name was, the female judge, that she would vote in favor of AMC, or that a settlement would happen. I'm 99% sure that if there is a vote for more shares in October, that vote will go through. But I'm not 100% certain. And what happens if it doesn't go through? Interest rates go up. AMC's interest cost goes up. That's already built in to the July documents. Now you got more debt expense hitting every quarter. That's not great. I'm not going to be super bullish about interest expense going up, personally. I don't even have a vote right now. So I don't know what's going to be on the proxy, and I am never going to tell you how to vote, and I don't even have a vote because I don't own any shares. So that's going to be up to y'all and the squabbles that will happen once we see the proxy in October. But I don't know how shorts are thinking. I think that if I was thinking like a short, I would expect that AMC will get more shares passed because they need it. It's very dangerous for this company not to have access to more capital. They got to fix the balance sheet. If I was AMC and I didn't get access to more shares and box office just kind of languishes, I'd probably hang my hat up and file Chapter 11. Personally. I know no one wants to hear that, but I think it is imperative to the company that they get that vote passed, so I think it will pass. And so you should, however you're thinking, you should plan accordingly. It's not going to be great news if it doesn't pass. It's not going to be great news if it does pass. It's the same damn dilemma we had in 2023. It's scary operating a company. Just think about AMC operating on the thin razor edge of profitability every quarter. Imagine not having any debt raise. Imagine having no cash raise ability. Ouch. I mean, you're one bad quarter and you're toast. You think the Bears are going to be scared if the company has no cash raisability? I think they would be emboldened, personally. But, you know, there'll be those people just like in 2023. But yeah, you got to vote against more shares because that's the only way we'll get a squeeze. Okay. Ask MMAT, M-M-A-T, how that worked out when shareholders voted no more shares. 2 months later, they filed Chapter 11. Go do your research. Jim Eagle says shorts have 6 to 9 months left to play with the refinancing done. Yeah, I mean, I think, Jim, at some point, if the company can get cash flow positive, net income positive, EBITDA positive, you know, if you can survive through that through smart trading or sitting out, you know, depending on whatever floats your boat. My personal is sitting out at the moment. I think if the company can get to that point where all of those things happen, things change in the AMC story, and the short thesis becomes it becomes tougher to have a short thesis. But they do, watch my video that I put out 2 hours ago. The company does need to fix the debt to EBITDA ratio, the financial leverage ratios that Sean mentioned. And when I hear them say that, I still got this nagging concern in the back of my head that even if things are going great, there's only 2 ways to fix the leverage ratios: improve EBITDA or decrease debt. So what do? If you have access to shares and the share price gets run up, might be a good time to do some debt for equity swaps. I'm not going to say right now that we're out of the woods for future dilution. I got to think like a CFO, and they need to fix these leverage ratios. It's not just get box office better. There's ratios that affect their credit rating that got to be fixed. Michael, I haven't looked at any other company's earnings for today. I woke up to the surprise run up in pre-market, and then I found out that AMC had released earnings early, and I basically worked on updating my model and a bunch of other AMC related stuff all day. So that's literally all I've had time to do today. Davindo Vasha says, what is AMC's debt right now? That is a good question. Let me pull that up. Excuse me while I whip this out. Name that movie. AMC's debt. We're looking at long-term debt plus current portion of long-term debt. Current 20 million plus 3.9. It's basically 4 billion, Davinda. And that is down from about a high of 5.7. So they've paid off 1.7 billion of long-term debt. Long-term leases is also down 1.3 billion. I mean, that's a 3 billion improvement. They're doing the work, but it's tough when you got long-term leases. It's not like GameStop that's got 4-year leases. We're talking 10, 15-year leases on these properties. It's slow work. They are, yes, Lonnie, they are fixing the balance sheet as I just laid out. Long-term debt being reduced, long-term leases being reduced. They're doing the work. We're not quite there yet, though. And if you want to know what I'm talking about, we got to look at debt to EBITDA ratio. It is saying it's 4.47. Debt to equity ratio negative 4.8. We got to get the debt to equity ratio also positive. We can't have an upside down balance sheet. We can't have current liabilities higher than current assets. We can't have total liabilities higher than total assets. A little bit more work to be done. Little bit more work to be done. It's not going to happen overnight. MF0 says, Ryan Cohen will save AMC. Come on, Ryan Cohen and Rowan Kitty, where you at? Let's help out this meme basket. Gabriel says, can AMC not trade at a price over $3 even with some dilution in December? Isn't it ready to trade at almost $5? I mean, it's tough for me to answer that question because I want to tell you that I traditionally look at stocks, companies, and I look for what is the expectation for next 12 months positive earnings, and then multiply that times the industry PE ratio, which for cinema is 15 to 20. But the problem is I can't tell you that there's a positive earnings expectation for the next 12 months. Even if there is, what is that number on an annual basis? And then when you multiply that times 15, what's that price target? As long as the expectation is negative earnings, tough to say. I will get into some Q3 and next 12-month forecast videos with you guys as Q3 progresses, and we can make some, reasonable guesses about Q3. But I mean, if Q3 is worse than Q2, that's another negative. So now we got to think about Q4 to Q4. I'm not at a point where I can tell you we're on a forward 12-month positive earnings expectation yet. So how do I tell you what the company's worth? I can't discount future cash flows. I can't create a PE times earnings number that's positive. The stock is worth what people are willing to pay, and it is going to be beaten down by what the shorts think. That's that yin to yang battle between speculative investors hopeful for the future and shorts thinking that more dilution's coming. We got to get the numbers better. We need that box office up. Anytime someone tells you go see a movie, buy concessions, that is what you need to be listening to. Go see a movie, buy concessions. That makes a material difference. Buying shares, how much does that help? The shorts they're not done with it yet. You probably got enough shares. I get it. If the price gets beaten down absurdly, all right, add a few, but you don't need to be buying every day. You do need to increase the net income. You need to increase the concessions and the box office admissions. That's what I do while I'm sitting out. I'm going to watch movies, buying some food, buying some drinks. Gabriel says, can I do a video on those calculations? I will. I provide much more frequent updates in the Discord than I do on YouTube, just because I get tired of people saying, oh, you're being too bearish. No, I'm just being realistic. I'm being realistic. My Discord audience can handle it. Social media, not quite ready for it. Ross says, I saw Weapons. It was unbelievable. I saw Weapons too. In terms of a horror movie, really imaginative, I would say. They have a nonlinear timeline, which makes it interesting. What do I mean by nonlinear? Think of Pulp Fiction, where you're seeing the movie from different characters' perspectives. Jumps back. You replay a scene, but from the different character. I like that. That was imaginative. The acting, for most typical horror movies is horrible. These are all great actors and actresses, a fine film, a fun film. Hopefully it does really well. People seem to be liking it. Terry Wilson says, I always love buying the premium stuff like food and beer, candy, popcorn, and soda for the kids. Number one combo, popcorn, large popcorn, a large soda, and a box of candy of your choice. I'm being a little more relaxed on my keto diet that allows me to do that, but I can't do that 3 or 4 times a week. I can't do popcorn and candy 3 or 4 times a week. And I'm still angry that they got rid of the beef jerky. Come on, man. But we found some workarounds. They're not ideal. Boneless chicken wings or bone-in chicken wings. Still not ideal. Bring back the beef jerky, Adam. There are some chocolate powder-coated almonds that I'll get from time to time. Not ideal for a carnivore diet, but better than a huge tub of popcorn. Yeah, Gabel says in the pre-market, the numbers were absolutely positive. Why is the price not showing improvement? I think, I don't know who was running the price up in pre-market, but the shorts were having none of that. I heard Adam at the end of the call say they beat expectations. I was just looking at expectations, and expectations were not beat from what I'm seeing. Expectations were a revenue of $1.4 billion, so we pretty much matched that with the EPS of -1 cent, and they came in at GAAP. They came in at where's -1 cent, but adjusted EPS -5 cents. So I don't know. I mean, it's right there. I don't think that they beat it. I'm surprised that he said that. It was right in line with analyst expectations. Kenneth says, what is my advice to AMC shareholders? I can't give you guys advice because I'm not your financial advisor. I can tell you what I'm doing. What I'm doing is sitting out. As you guys know, if you followed my channel, I sold in November. If you want to know why, look at the price in November compared to today. I'm sitting out. I'm telling you guys, until I see a momentum change on the chart, that might be interesting to me. But until I do, I'm sitting out until I see how Q3 plays out. I'm worried about the box office being lower than Q2. And until I see what is on the October proxy statement. It is very annoying for me to sit out. I will tell you that. It's very annoying. But I got to respect my risk management. That is my risk management. Sit out. I can always jump in. If it starts taking off, I can always jump in. I'm just patiently twiddling my thumbs, watching movies, buying popcorn. That is not the answer for everybody. Everybody's got different cost basis. Some people need to average down. Some of y'all have higher risk tolerance. Some of y'all have different expectations for box office. Look, there's no guarantee that I'm going to be right on anything. But I am playing it very conservatively, admittedly. I'm just being upfront with you how I'm looking at it. Doesn't mean that that is the right answer for you. Mediocre says, ride that train. Roll the dice, Tony. No, I will not. When the risk is known, I will have a more reliable set of facts to make some decisions around. No emotions, Devinda. No emotions, and be patient. Again, if it starts running, I'm here every day. It's a one-button press. If it's running to $10, do I care if I got in at 302 or 340? I do not care. It's that simple. You got to shift your thinking. I'm not worried about a massive run up. Maybe one happens and maybe one doesn't. I will be here and I will be playing it if it does. Until then, patience, cool, calm, collected, no emotions. Terry Wilson Jr. says, I buy one share every cent it goes down. I mean, there's nothing wrong with dollar cost averaging to the downside. If we zoom out the chart, whoops, not that far out. I mean, back in November, before the company ran out of shares, I'll look at my buy prices here. I was buying at 407, 419, what is that? 446. The lower it went, the more I bought. I got out at 434, and that was very close to break even. It killed me to get out break even. And if I would have just been patient a few more weeks, I could have got out at a profit. It didn't matter to me. I was worried about dilution, and I was correct in December. By looking at their cash flow and their cash balance, I was worried, as I told you guys back in November, that dilution was coming, and it did. And now we're at $3. So I'm okay with sitting out and waiting. Demand zone is sitting at 270 to 280, but that might not be respected. We could go below that demand zone if they announce a significant introduction of additional shares in October. You guys know what I'm talking about. I have no idea what they're going to announce in October, but we'll find out. Davindo says, take up fishing, less anxiety. I like it. I like it. Jim, oh, that's a good point, Jim. What are the analysts saying for Q3? Hey, thank you for bringing that up. You're saying they're saying 1.32 billion. Let's see what we got here. Yeah, 1.36. So they're predicting slightly less revenue for Q3 and negative 9 cents. You're correct. And even with Q4, I mean, I want to be super bullish on Q4. They're saying it barely beats Q2. I mean, that would suck balls. Can you imagine just barely being profitable in Q4? Imagine, even in my own mind, I'm expecting a wildly successful Q4. Imagine what the real pumpers out there in social media are going to be saying. The expectations of Q4, even Adam said he thinks it's going to be the best revenue in 6 years. That's some massive expectations being set, and the analysts are saying 1.42. Who's going to be right? I don't know. Mediocre says, I trade every day to make money. No emotions. Amen, brother. Ruby says, Tony, are you saying if the October proxy has a call for votes, a call for more shares, I think you mean that the price will go down for that request being made? Ruby, I think let's game that out for a second. I think that the real reaction happens when the vote results are known in December, but that there could be some volatility, some jockeying in October when the proxy comes out. Yeah. I think when the news comes out, depending on how management communicates it, what they ask for, do they say we're asking for all this, but we're not going to use it? How do they message everything? That's all going to weigh on what the reaction is in October, and then what the what the vote is in December is another point where you get some volatility. But man, I'm not going to really be getting into that discussion much, other than telling you guys I expect you'll see something in October. I'm not going to get in that whole debate of what is it going to be? How bad is it going to be? I don't freaking know. I'd say 99% something will be there. And we'll talk about it when it happens. I'm not interested in getting in all the social media bickering back and forth between now and October. All right, ladies and gents, I only ate breakfast this morning. It's almost 6 o'clock. I got some leftover pasta from Scarlett's dad. I polished off half of that after the Sunday evening live stream, or Saturday, whenever that was. I got that, and I got some chicken drumsticks that I cooked last night, so I got to get some food in me. And I think the other interesting thing for you guys, I'll put a video out about this later tonight or tomorrow. Please go watch my GameStop video from this weekend. Please go watch the AMC recap video that came out 2 hours ago. And I think one of the next things that I want to talk about is just to remind you guys, this Friday, August 15th, Cinemark 2020 bonds will mature. These are convertible bonds. These are bonds that are trading 2x the conversion price. These are convertible bonds trading at 2x the conversion price that no one has converted. 566 people, are you listening to what I'm saying? They're trading at 2x the conversion price and no one has converted. GameStop people, are you listening? They're trading at 2x the conversion price and no one has converted. Why? Because convertible bond traders don't convert until very close to maturity. We're about to see what happens this week when those convertible bond holders convert. The short interest, because of the delta hedging, is over 20% in Cinemark, despite them being profitable. You're about to see what happens when massive shorts unwind. It's going to be interesting. I have never paid this close attention to one live. I'm fascinated to see what happens. Hopefully you guys are too, especially if you're trading AMC or GameStop, which have convertible bonds, and a lot of social media accounts giving you a lot of misinformation about what is going to happen with AMC and GameStop convertible bonds. They got it all wrong. They got it all wrong, in my opinion. So keep an eye on Cinemark. Let's see what happens. I got to get some food before I pass out here. So with that being said, let's do a little up and to the right. And I will check in with you guys in Discord. Please support the channel. Join as a subscriber. That's free if you're on YouTube. Join as a member if you like cold-blooded, emotionless content. I appreciate those of you that chip in a couple pennies per day to help support the content provided here. And click on the link in the video description to join us in the Discord. A lot of like-minded investors, people with level heads, non-hopium, just trying to make the best profitable trades in dozens and dozens of tickers that we discuss every day, every week. I will see you guys on the next one. Thank you for your time today.
Up and to the right. Up and to the right. Up and to the right.
Hello, millionaire. Short screenplays where fortunes flip. GameStop's journey, an epic trip. From humble roots to the moon we fly. A company's dream will amplify. Red warriors, keyboards in hand. With their eyes on the prize, they took a stand. No one's selling, we're here to fight. How does it go? Up and to the right. Up and to the right, we're in for the ride. It stops on the rise, it can't be denied. Up and to the right, through the day and night. Together we'll soar, the last is in sight. Up and to the right, we're in for the ride. It stops on the rise, it can't be denied. one, but the retail army we've already won. With every share we'll never stop. Investors say we love the stock. Up and to the right, we're in for the ride. It stops on the rise, it can't be denied. Up and to the right, through the day and night. Together we'll soar. Up and to the right.
Surprise!
We're gonna win.